Un nombre uno, let the IRS know how much dough you hold, because evasion breeds penalties, especially if that prep messed up. Watch your tax go up. Number 2, document expenses you could prove. Don't you know them boys treat lying like violence?
What if I told you for $1, I will introduce you to hundreds of entrepreneurs every single morning this week? From all across the country, you'll be able to talk to hundreds of entrepreneurs, and I'll coach you. I'll coach you for $1 this whole week, and I'll introduce you to some of my successful friends for $1 this week. Would you take part in that? Well, go to themorningmeetup.com because that's exactly what we're doing here, okay? The only organization that gathers entrepreneurs every single day for the betterment of entrepreneurship, okay? Every single day, Monday through Friday, we gather, we're growing, we're learning. We got a book club. Have you ever seen hundreds of entrepreneurs reading the same book every single chapter, every single day? We're growing together, okay? You need the environment to grow in. Themorningmeetup.com, $1. I'm gonna give you all of this for $1. If you wanna stay, great. It's $79 a month after that. If not, no obligation. You can leave whenever you want. All right? themorningmeetup.com. I'll see you in the morning. Welcome to another edition of the Social Proof Podcast, where we find amazing people that do amazing stuff and they can teach you how you too can be amazing. And I think we got is this a serious topic?
I try not to make it too serious, but it's an important topic.
It's not fun though.
I try to make it fun, but it's generally speaking, it's not the most exciting topic.
Yeah, man. We're going to tackle some stuff today, man. We got the tax man. Okay, so you're not the tax man, but you teach people how to get the tax man up off you.
That's right.
So Are you what would you be called? What do you call it? What's your title?
So on paper, I'm a certified public accountant.
CPA?
Yeah, so okay. CPA, and then a tax strategist. So providing entrepreneurs, individuals, investors, strategies on how they can proactively save $10,000 to $100,000 in taxes legally and ethically.
How to save $2,000, bring your mic up a little bit.
Yeah. $10,000. $10,000
to $100,000.
Yeah, $10,000 to $100,000 in taxes legally and ethically.
First off, why we got to pay taxes?
That's a great question.
And you know what? And why is it that it seems like wealthy people don't pay taxes?
It seems that way. So if we look back at history, so really what the taxes are for is for the government to generate revenue, right? So They take that revenue and they're supposed to do things to serve the country, the community, such as like building roads, innovations, etc. So that's what that money's used for, potentially helping lower income individuals and creating opportunities. So it's supposed to be used to help support us and kind of keep the economy and everything thriving and keep it going. And why it may appear that when I think that's a huge misconception, that's a myth that I try to debunk, is like it seems like the rich and the wealthy paid no money in taxes, but really I call it the ignorant and the enlightened. That's what it really comes down to, meaning that you don't necessarily have to be rich or wealthy in order to be able to save money on taxes. You just, once you know the tax game, once you know the tax code and you know how to maneuver it, then you can save money on taxes.
But rich and wealthy people do spend significantly less in taxes, though, right?
They tend to,
percentage-wise.
They tend to, but because they communicate and they have the people in their circle understand the tax code, or they work with people that can help break down the tax code to them to help them save money on taxes.
Okay, well, go ahead and introduce yourself first, because I got some tough questions for myself. I need to know myself.
Well, appreciate you for having me on. My name is Michel Valbrun. I'm a certified public accountant, tax strategist, and award-winning author. Also go by Money Making Mitch. So if you can't pronounce Michel, I also go by Money Making Mitch. And yeah, really what I do, like I said, is I help entrepreneurs, investors, and individuals save $10,000 to $100,000 in taxes legally and ethically. And I really do that through a methodology that I call the CPA success system. So you're going to find I use a lot of acronyms, because when I was coming up when I was learning accounting and taxes in school, I had to memorize a lot of formulas. I had to do different things in order to pass the CPA exam. So I'm just really big on acronyms. So that CPA stands for clarity. So I help an individual, when someone first comes up to me, first I help them get clarity on their current situation. So if you were to give me a call, I'll take a deep dive on your situation, understand, okay, how much money are you making? How many assets do you have? And just to really do a deep dive and help you get clarity on currently where you're at. And typically that clarity comes with you realizing that you're overpaying in taxes. And then the next part of that is power. So once you have that clarity, then I give you the tools and knowledge and information that you need in order to be able to get yourself to and take yourself to the next level, whether that's saving 10,000 to 100,000, whether that's, setting up your life and your business to be more tax efficient or whatever the case is. And then last but not least, that A piece is accountability. So actually working with someone that's going to help you, be able to take accountability and actually implement those things that I share with you.
Okay. And how long you been in the game?
I've been in the game for over 10 years.
Over 10 years?
Yes, sir.
What got you into it? Why CPA? Why?
That's an interesting question. So for me, like my parents were entrepreneurs, right? So they actually had a tax business. So I'm originally from South Florida.
Oh, your parents had a tax business?
Yeah, they had a tax business. Yeah. So
you was born into this?
Yeah, I was born into it, but I didn't know that I was going to get into it. I seen them do it, but I didn't consciously say, hey, I wanted to get into taxes. It just kind of naturally happened. So as my life progressed, what ended up happening was like I already always knew that I wanted to be an entrepreneur because I seen the life they were living. So with that, as I was getting to entrepreneurship, I had a teacher tell me that, accounting is the language of business. If you get into accounting, you understand accounting, you're gonna be like a beast in business. So and it really did help me. So just naturally as I progressed, got through school, you just keep hitting different milestones. So you finish school and they're like, well, you need to get a CPA. So I go out and get the CPA exam. It's like, okay, now you need to work for this company. So then you go out and try to do an internship with, the big companies out there. And then it just happened to naturally progress that way.
Got you. So were you an entrepreneur? When did you become an entrepreneur?
So I became an entrepreneur about, I would say 3 years ago, like officially, yeah.
I guess that's when I kind of seen you moving.
Yeah, that's when I really was heavy, yeah.
And I'm starting to see you everywhere, really. How do we meet, Mitch? Do you remember?
Yeah. So I remember, I met you first, or I knew about you first because I'm a big fan of E.T., right? So Eric Thomas, huge fan. I think he had what was the conference? I think it was something Ready, Get Ready, Stay Ready, something like that.
Stay Ready, yeah.
Stay ready conference. He did it in Atlanta. I pulled up. I was going through, I was looking at the roster. It was you, it was Inky. I think it was Jeremy Anderson on there. And you came up and like your style of speaking was it was different. You know what I mean? It was just so authentic. It was natural. I'm so used to E.T. going up there. Yeah, I'm used to E.T. coming up with all that energy. And you just came in there, you're like, yo, this is what you need to do, business. And you were giving out tips on like just entrepreneurship, et cetera. And then I started following you, and then I noticed that you had a post saying that you were doing some event at the Google headquarters out here, and you collaborated with a gentleman who works for Google.
Yeah.
I pull up, I went over there, I went up to you, introduced myself, and I told you some of the things that I was trying to do, and you're like, join the Meetup group. I got this. I think at the time it was called Sleepless Nights Coaching. Yeah. So I got in there. I stayed in there for like well over a year. And I got what was impressive to me was like how much you pour into the group. Like, I think, what are you doing? Like 6 days a week, 5 days a week?
Still doing it.
Yeah. Every day consistently. Like holidays sometimes I'm just like, bro.
Oh, yeah, everyone.
Yeah.
If and it went on a Monday through Friday?
Yeah.
You getting this work. Yeah.
So I joined that group, and then I guess we started knowing each other through that. And then that's kind of how it happened.
Yes, because I want to say you were pretty fresh in terms of like the entrepreneurial thing, right? And then I just started to see you everywhere. How did you get on the Red Table Talk? Explain that.
The Red Table, so Sister Circle?
Yeah, Sister Circle. Yeah,
Sister Circle.
Sister Circle.
Sister Circle. Yeah, networking. Networking, literally. So networking. Not real talk. Yeah, just networking. I happened to, so coincidentally enough, I have one of my good friends, like one of my best friends, he's like groomsman at my wedding. His wife was friends with one of the producers, and I've been knowing her like forever. You know what I mean? Like, well, not forever, but like I've been knowing her for some time. Very casual, didn't know what she did. And it just so happens that, I figured out that she was a producer on the show. And then coincidentally, even before that, and this is just this is the great thing about just being the timing and everything was perfect, because before that, I remember I was in your group and I was asking you about like, yo, what do I do to take this thing to the next level? You're like, write a book. You just told me, you said write a book. I was like, okay, so I wrote the book, and I wrote the book Prolific Profit. So I think that even positioned me even more. And then before that, I was doing like YouTube videos pretty consistently. So then I sent her a DM and I was just like, yo, I got this book out.
Yeah.
This is what I want to talk about. This is what I do. And she's like, cool, send me some videos. They saw one of the videos on there about like the top 5 ways to suspend your tax refund. They enjoyed it. And yeah, that's how I got the opportunity.
There it is.
Yeah.
Moral of the story, I'm the best coach in the world. Okay. So join the morning meetup, themorningmeetup.com. Okay, so let's get into this big scary stuff, man. As an entrepreneur, okay, what I do is I'll go buy a blank t-shirt and I'll get the shirt printed and I'll pay these people for this process. And then I sell it to you and you give me $25 for the t-shirt.
Right.
Do I have to pay taxes on that?
I give you $25?
You give me $25. Do I have to pay taxes?
If it's a product, you should be paying sales tax, or you should be withholding sales tax.
Yeah.
So someone's got to pay the tax on it.
For sure.
So that's how that works.
So if I do that $100,000 worth of money and I don't, what's the problem? They don't call me. The first year I get away with it. What's the problem?
Sales tax is one of those big things that they get you for. If they didn't hit you up, they know. Like especially if you got money coming through like payment processes and all that. I don't know if it's all cash, but they know I think they know, and they just kind of let it accumulate, because these companies are reporting. So like, let's say you're using Square. Square has to let them know, it's like, hey, this individual made this kind of money, and they're letting them know. And they should be, if you make a certain amount, they should be giving like a form or a 1099, et cetera. So they know. So then if you don't do that, then you could pay fines and penalties, et cetera. So you should be with the sales tax, you want to be withholding it. And then depending on your state, because it's managed by the state, you either want to pay it on a monthly, quarterly, whatever the frequency or the.
When you say they know, like, do they like see it and they're just like building a case against me?
That could be possibly it. So that could be one thing, or they just haven't gone around to it, because you gotta think about it. Like, we got hundreds of millions of people in this country, right? Yeah. So they may not get the chance to see everything. So either they haven't gotten to it yet to reach out to you on it, or maybe they haven't gotten to it, but it's a dangerous game to play. Yeah.
You know, how do people get caught up in tax? Is it like they're spinning the wheels, say, okay, Wesley Snipes, you're the one today, right? So is it at random, like when they attack?
Yeah, so there's a small percentage that's random, and then there's certain red flags. So like depending on how you fill out your taxes, so if there's like miscalculations, if you have like huge deductions, let's say you make a little bit of money, and they see this huge deduction, you're just showing a loss, you're not paying any taxes, right. They're gonna want to look into it. There's certain other things in there that if you put it in there, it may cause a red flag. And then in the case of Wesley Snipes, I mean, that's a public figure. You know what I mean? So like, they know he's making money, and he's probably either when he's doing the taxes, he's not showing like any money, or he's just not doing them at all. And then that's how people get caught up. And another thing too, what a lot of people end up messing up with is, as an entrepreneur, and like Wesley Snipes is technically like an entrepreneur, right? He's not a W-2 worker where your taxes are already taken out. Right. So what happens is, a lot of people, they're not withholding on the taxes that they pay, or they're not paying it out throughout the year. So what ends up happening is, because you're making all this money, you're not even thinking about taxes. You're just like, I'll pay when tax season comes through, whatever. And you know, that's how people get caught up, because they end up allowing it to actually. So I'll give you a real life scenario. I was on a call with a client the other day, and they were in the medical field, and they were getting paid like as a 1099. So they do like they work in the medical field, or whatever the case is, and they weren't withholding taxes, then this individual's making like $200,000, $300,000, a ton of money, not holding taxes because they didn't know. And that accumulated so that for that year, I think it was they were supposed to owe like $100,000 and didn't pay it. The next year, they didn't withhold their taxes, so that was like another $100 that they had to pay. And then they finally got a letter from the IRS, like I think 3 years later, telling them that they owe plus fines and penalties, which brought it up to like $300,000 and interest. So yeah.
Are you able to negotiate that?
Yeah. So yeah, so there's a couple ways to reduce that. So you can do what's called like an offer and compromise with the government. So basically, yeah, like a negotiation saying, hey, I'm going to pay it off over this amount of time. And then sometimes they can reduce it for you. There's another option is just filing for bankruptcy. So some people do that, unfortunately. So that might be a route to go. Going ahead and just doing a payment plan and just paying it off.
So you could call them, okay, I owe $100,000, be like, yo, listen, bro. I got 50 for you right now. Hold me down. Wipe away that other 50. They sometimes take that.
Yeah.
Okay,
if you could, so at the end of the day, they want money. They want most of the money. You know what I mean? I'm not I'm gonna say everyone should pay the full amount that they owe.
For sure.
You know what I mean? But
do you feel like an obligation as an American to pay taxes? Like when people start talking about evading taxes and stuff like that, do you feel as a certified public accountant, like, I feel we all need to pay taxes? No?
So yes and no. So this is what I think. So I think there could be an argument made, and this is like a radical idea. I think there could be an argument made that it's actually unethical or unethical to overpaying taxes, meaning that money that you didn't necessarily need to. So well, taking a step back. So you got two concepts as it relates to tax. So you have tax avoidance and you got tax evasion.
Tax avoidance and
tax evasion.
Okay.
Tax evasion is illegal. Tax evasion is where you're underreporting your income or overstating your expenses. That's tax evasion, or just not even paying the taxes. That's evasion. That's, I think, what Wesley Snipes was doing. You got tax avoidance, where you're looking at the tax code and you're legally and ethically using the things that are in the tax code to reduce how much money you pay in taxes. And then the reason why I think there can be an argument made that it's unethical or unethical to underpaying or to overpaying taxes, because that money could be used towards your family. That money could be used towards your business. That money could be used towards charity if you're a good person. You know what I mean? Because despite who, Democrat, Republican, whatever the case is, I personally feel like I could use my money better than, the way they use it. You know what I mean? So that's how I personally feel. And then think about this too. And this is what I always tell people. People don't realize how much money they spend in taxes. So when you make money, when you make income, you pay income tax. When you pay for something, you pay sales tax, what we just talked about. When you buy property, you pay property tax. When you sell the property for more than what you paid for it, you pay capital gains tax. When you die, you pay estate tax. Someone is paying estate tax. So we're getting hit with taxes left and right. So it's not like you're not going to pay no taxes during the year. It's just a matter of you, again, being aware of the tax code and then figuring out, okay, how do I legally and ethically reduce how much money I spend in taxes?
Got you. So for small business entrepreneurs, what is the best practice? Like, what should we be doing?
Yeah, so there's a couple things. So one, definitely you want to be aware of the tax code, right? So whether that's working with a tax professional, CPA, just getting educated on that. So that's number one. And then number two, you just want to make sure that you're taking advantage of the ways to save money on taxes. So the 6 big ways to save money on taxes is maximizing deductions. So just being aware of how you can maximize your deductions. If you don't know what a deduction is, basically deduction is an expense that you have in your business. And there's 4 requirements that the IRS has as far as deducting things from your income. And the 4 requirements, I call it tax-free, another acronym. So the first part of that free is it needs to be for business. So if the expense is for business, you can go ahead, write that off, take that off from your income. The next part of that is R, which is regular. So it needs to be seen as regular or ordinary for the business. So again, like what you're doing right now.
For the business, and the R is regular.
Regular. So the IRS calls that ordinary.
Okay.
So in your case, right, so you have this podcast, a regular or ordinary expense would be lights, microphone, camera. Those kind of things are considered ordinary or regular for the business. Maybe if you're buying if you're buying nail supplies for this, and you're not doing nails or not talking about nails. Like that's not regular, ordinary for this type of business. So you want to make sure it's ordinary. The next part of that is essential. The IRS also calls that necessary, and it just needs to be what you need in order to have your business generate revenue and be profitable, et cetera. And the last part of it is extravagant less. So it can't be extravagant. So one of the things that people do is like
extravagant less.
That's a word I made up. So it's a word to make that free. It was a stretch. It was a stretch. I'm not gonna lie.
Just reaching on that last E,
a little bit of reach. But the IRS calls that not extravagant or lavish. So basically what that means is that, let's say you're going out to a dinner or whatever, you can deduct for a business meal, right? So you can go ahead, have a meal with someone, a client, a potential client, or a customer, and you could deduct for that meal. But if you're going out there and you guys are dropping like 10,000, you guys are popping champagne and doing all this other stuff, then that could be deemed as potentially extravagant or lavish. It's like, okay, the IRS is gonna look at that as like, okay, you're doing the most. And then they're gonna wanna dive deeper into it. And that's how people get audited and start, raising red flags with the IRS.
You should use like economical. Economical.
I like that.
You like that?
That's a real word.
Yeah.
Except extravagant
less. It threw me through a loop because I'm thinking.
Yeah, it's like almost like a double negative. A little.
Exactly.
Yeah. I feel you. Economical. I like that. I wanted to. So the thing about it was I wanted to use a word that they use, but I like that, economical. I'm gonna switch it up.
That's what I'm here for, man. Best coach in the world, man. Go to Meetup.
Appreciate you.
Go to Meetup.com. Be a part of this. Okay, so are you good with money? Would you say?
I'd say so. Relatively good.
So I know a CPA. I was not good with money. Do you feel like understanding how money works and actually like saving and stuff like that yourself? Right. It's two totally different things.
That's true. So knowledge doesn't necessarily mean application. Yeah. Facts. That's real.
So what are some of the things that you would say like you're good with money? Like why do you say you're good with money?
Yeah, I say I'm good with money because I believe that I make great investments as it relates to my business. So if I'm going to spend money, I already know where that money is going to be. I'm pretty analytical. So if I'm spending money on a certain expense, I expect to try to have at least like a 2x return or potentially 5x return on that money that I invested. So that's one way.
Give me an example.
So an example would be something I invested in. So I recently invested in a program to teach me how to use IG or whatever, right? So I spent like $2,000 on the program, and I think I ended up making like $30,000 within a month. So that's kind of what I mean by like just trying to be like responsible and researching the individual and making sure that whatever they do actually works.
What program was that though?
It's someone I found on IG.
Somebody you just randomly found?
Someone I kind of, yes and no. No. So I didn't know the person before. So she was making content, creating content about how to make money online on IG. And I DM'd her and I was like, yo, can you show me the game? She's actually, coincidentally, a lawyer attorney.
Oh, wow.
And she gave me game on how to do that.
So what did you learn that took you from 2000, you took your investment of 2000 to 30? What did you learn?
Yeah, a couple things. So really with IG, I just didn't know how to post, bro. So honestly, I was just posting random things. I post my personal life. Right. The biggest thing was I wasn't adding much value. You know what I mean? So I was just kind of posting things that I thought were important. So that was one thing. Consistency. I wasn't consistent with it. Right. And I think the biggest thing was really just ads. So like paying influencer ads. So going on big pages or whatever, paying them some money to post my content. And if it's good content, valuable content, like the gems that Neil was dropping, that actually inspired me to really start looking and diving into that podcast y'all did. Yeah, he was talking about his $1,000 hack and all that kind of stuff. I was just like, okay, yo, let me look at a little more into IG, because before I was looking at IG, I was just like, people aren't here just posting random pictures, and I didn't understand. I didn't really see it as a true monetization tool, because I was heavy in Facebook ads before that.
So it was like the consistency. You just didn't know how to post at all, which is that's why I'm glad that we're doing the bootcamp. Because everybody's going to leave understanding what you now know. Well, in terms of anything you struggle with on social media?
Right now?
Yeah. And do you want to know?
Trying to think.
I'm trying to sell you on coming to my boot camp.
I'll pull up. You kind of sold me on that. I want to pull up.
It's about to be amazing.
I think, honestly, for me, content creation, which is funny, content, but I'm not even saying that just to like, so me, I'm pretty good at, so what my comfort level in my space is like tweeting. So I'm good at, I can come up with a really quick tweet because it's a few characters or whatever, but actually thinking about, okay, because I know video converts pretty well and that creates a bigger connection with your audience. So like coming up with thinking about ways that I need to, how do I go about creating a lot of videos that I could use and post and they'll be able to convert well and get a whole bunch of engagement.
I got you, my brother.
You got that in there?
So I actually have a course coming out too, but the boot camp is like really going to be like impactful. It's like one-on-one stuff. But yeah. So actually by the time this drops, I'll probably have a course out. So yeah, I appreciate you helping me sell the course to my people. All right. So back to the numbers.
Yeah.
Give me, where do most entrepreneurs mess up in terms of handling the money? Because it's hard, man. And now that you say it, I think that the government figured out a way to protect employees by taking their money first, straight out of the check.
It was a way for them to protect themselves because before it wasn't taken out of their payroll.
Really?
Yeah.
When did this?
I don't remember. I think it had to be hundreds of years ago. But I know when they first started having wages, they weren't taking out of the paychecks because they knew people, if they know that if they just leave it up to people, they're not going to go ahead and they're not going to pay it. Right. So they're just like, you know what, let's just go ahead and create a system to where it's like automatically pull out the account. Yeah.
And that's why I say I think it's to protect us too, because there'd be a lot more of us in tax trouble.
Yeah.
Because like who just, first off, and this is just me, because I just hate doing it. Every year, I plan on paying taxes quarterly. Every year.
And you should.
I plan on it. That's the goal.
Yeah.
It's on my resolution list.
Right.
And I don't. And then I'm sick when they just want this chunk of money. And I'm like, come on, man. Yeah. That's why I'm about to call. I'm about to call them like, yo, I got a negotiation for you.
Yeah, you need to be paying quarterly at least. How
do you do it? You call the IRS? First off, every time I call them, they just never.
They're not the easiest people to get in contact with. Yeah. So they got an online portal that you can go ahead and put it through.
I can't negotiate through the online portal though.
Oh, if you need to negotiate, then we need to have a conversation. Okay, yeah, we need that.
Because they send you the bill, they want $100. But you know you can call them and say, yo, I got 80. Is that right?
That it's not as
they're going to attack me for this podcast. You know what? No, pay the full thing, okay?
Yeah, pay the full thing. They provide an option to do that, but it depends on, because you're dealing with people too, right? So like, depending on who you talk to and your situation, whatever, your financial situation, like, so you kind of can see it like a little bit like, if I gave you a simple example, like student loans a little bit, you know what I mean? So they take different things into consideration.
So rule number 1 is call with your humble voice. You're like, hey, man, just going through some tough times, man. You know, COVID,
right?
It took us out. So, okay. Yeah, I'm using COVID. Oh, they're going to attack me for this. All right, so what should we be doing? Okay, we want to pay quarterly, but how do you pay quarterly?
Yeah, so if you make more than $1,000 in profit, you need to pay, you got to pay them upfront. So basically the way it works is there's a couple ways you could do it. So you can estimate how much you're going to make per quarter or during the year. So a good rule of thumb is like maybe between 30 to 50% of your profit, which is like a super conservative amount. Mm-hmm. And then there's also what's called like the safe harbor rule too. So this is kind of not necessarily a loophole, but a pass that they'll give you to avoid fines and penalties is if you look at your past tax return and then see how much you owed. If you pay at least, and it depends on different scenarios, but you definitely want to pay at least 100, if not 110% of that number, whatever you owed. And then if you go ahead and use that as your estimate, then they're going to give you a little bit of a pass at the end of the year. So even if you owe more than that, they'll say, okay, at least you made an effort. You looked at last year And that's kind of the way you could do it. But really, yeah, you want to submit it quarterly. There's the upcoming date now is January 15th. And then just every quarter after that, you want to go ahead and go through that portal online, fill it out, create an account, and then make that payment.
But what if you make less? Do they give you a refund?
Yeah, potentially you can get a refund. Potentially,
or they'll give me my refund.
No, but check this out. This is yes. To answer your question, yeah, if you overpay, you'll get a refund. Yeah.
Ooh,
I was thinking about something else. Yeah, you'll get a refund.
Okay.
Yeah. When it's tax season, you guys pretty much, tax season is pretty much just squaring up. Do I owe you? Do you owe me? And then they'll give you a refund if you overpaid or put too much in there.
Got you. And what is January 15th?
That's the estimated payment date for the fourth quarter.
The estimated payment date for the fourth quarter.
Yeah, so for the fourth quarter in 2020 or whenever the fourth quarter.
Okay, got you. And when's the next date?
I think it's March. I'm trying to.
So it's pretty much every quarter you have this deadline to pay. What you owed from the quarter.
Yeah.
Oh,
that's the right way. That's what you should be doing.
And is that what you do for people?
I can help people with that. Yeah.
Like, do you do it for them? Like,
I do what it costs. Yeah. Okay. I can do that for them. Yeah.
So do you do bookkeeping too?
Yeah, I have bookkeepers on my team.
Oh.
Yeah.
So full service little agency.
Yeah.
Not a little agency. It's a dope.
But agency. No, I got pretty much everything from accounting to tax, even some business related things. Yeah. Then we can handle that for you.
That is awesome.
Yeah. So I'm the CEO, so I'm not doing everything, but like I got people on my team that are doing all that kind of stuff. Yeah.
Got you. What are the questions that most business owners ask you about taxes? What do you think people they're just super confused about?
A couple of things, bro. Like the one thing that I find a lot of people miss out on, so new entrepreneurs, is they'll say, my business didn't make any money. Should I file taxes for it? And my answer is absolutely yes, 100%, because that even though you didn't make money in the business, that might show as a loss. So if you have W-2 income, that loss could be applied to that W-2 income or whatever you already paid into the tax system and potentially get a refund. So that's one thing.
All right, look, I know you're enjoying the episode, but I got to tell you, finally, you asked for it, and we created a Patreon, okay? We created an inner circle. We have amazing stories, amazing information, the how-tos from the episodes. The only thing we're missing is a community. So it's about that time. We put together a Patreon, we put together a community because we have to have conversation around the information. So even this podcast we're listening to right now, there needs to be conversation. I want to hear what you got. Like, let's throw some stuff back and forth. And because we're like-minded, we're all going in the same direction. When we connect in a community, we can connect on other stuff outside the community because we're building real relationships. Okay, so check out the Patreon. We got 3 tiers. I don't care what tier you join. The support is appreciated. Okay, thank you so much. Now back to the episode.
Another thing that people don't get or people are confused about, even in the accounting industry, like even CPAs are not even aware of this. So you have a concept called legal entities, you got tax entities. All right, so a legal entity is filed with the state. A legal entity is going to be your sole proprietorship, an LLC, a corporation, partnership. So those are your legal entities. The LLC, the limited liability company, what it does is it provides protection from your personal assets. So if someone were to come sue your business, it provides that protection. And the LLC, and this is what people get confused about, and when I post about it, people get upset because they think I'm lying about this, but the LLC inherently doesn't provide any tax benefit. It's just legal protection. That's not how you're taxed. You don't get taxed as an LLC. An LLC that's why it's considered a disregarded entity for tax purposes.
An LLC is a disregarded entity
for tax purposes. So the LLC doesn't inherently have tax benefits. What gives you the tax benefit with the LLC is the default category that you get taxed there. The default tax entity that you get hit with is the sole proprietorship. If you're a single member, if you have more than one person, then you're a partnership. So then you have tax entities. So you could be a sole proprietorship, you could be a partnership, you could be an S-CORP, you could be a C-CORP. Those are your tax entities.
What are you?
So I am a S-CORP. S-CORP. So the thing with the S-CORP is, taking a step back, so an LLC, So the great thing with the LLC is you can choose how you want to be taxed. So you could be if you're a single member LLC, you could be taxed as a sole proprietorship. You could be elected to be taxed as an S-Corp. You could be elected taxed as a C-Corp. You want to, with the sole proprietorship, you get taxed automatically 15.3%. That's how your taxes are. That's one of the ways they calculate your taxes. That's self-employment tax. So that's the government's way of, like, when you're working a W-2 job, you pay 7.65%. Your employer pays 7.65%. So that's kind of like the government's way of doing that. You're the employer and the owner. So they're taxing 15.3% on the profit of the business. So with the S-Corp, one of the benefits is, instead of getting hit with that 15.3 on the profit of the business, you actually just get 15.3 taken out on the salary that you pay yourself, which is one of the requirements with the S-Corp, is that you have to pay yourself a reasonable compensation or salary, because they know that you no longer have to pay 15.3 on the profit. So they want to get that money from the salary that you pay yourself.
So at LLC, I make $100,000. I got to pay 15% on the $100,000 as a business.
Profit. If you make $100,000 profit, 15.3. Yeah.
Got you. So if I'm an LLC, I make $100,000 profit. I pay $15,000 or 15%.
Yeah.
On the profit.
Yeah.
If I'm an S corp and the business makes a profit of $100,000, I pay myself $40,000, and I pay the 15% on the $40,000. What about the other $60,000 that the business made?
So S corps are pass-through entities, so that gets passed on to your personal return. So whatever your tax bracket is, or whatever your tax rate is, then that $60,000 gets passed over to your personal return.
The $60,000 gets passed over to my personal return,
but it doesn't get hit with that automatic 15.3. So it saves you money. It ultimately just saves you money.
So they don't tax the 60% at all?
It does get taxed, so it gets added on to your personal return. So it gets added on to your 1040. So you get the 60,000, but that 60,000 goes ahead. Like, let's say.
All right. So real quick, just so I'm following.
Yeah.
My business makes $100,000.
Yes.
I paid myself $40,000.
Yep.
As an employee, which means I'm going to pay 15% on the $40,000.
Yep.
But there's another $60,000 that my business profited.
Yep.
The government looks at that as $60,000 that the person made?
As a distribution. Like a dividend, so it gets carried over to your personal return. So with the S corp, you file what's called 1120S. Mm-hmm. That's the business return. So it calculates your income, your expenses, et cetera. And then that profit from the 60,000, it goes over to the 1040, gets carried over to the 1040. And then whatever your tax, let's say you're married filing jointly, right? So you have the 60,000, you already have the 40,000 that you pay taxes on. Then you have the $60,000 that's added to it. And then you have whatever, let's say your spouse makes. So then they calculate all that. And then that's how they come up with how much you pay in taxes.
But that other 60,000 isn't hit with 15%.
It doesn't get hit with that automatic 15.3. So that can save you just that move alone. Like if you calculate the difference, that's like the marginal difference of what you're saving in taxes. That's like thousands right there. Yeah. Wow.
Okay. So the best practice is there like an app that you recommend?
Yeah, there's a couple apps that I recommend. So, and then going back real quick to the S corp. So when it makes sense to switch over to the S corp is when you do $50,000 or more in profit. That's another question I get. It's like people was like, when should I switch over to the S corp? It makes sense when you have 50,000 or more, because that's kind of like the break even point. You know what I mean?
Got you. Yo, okay, I'm gonna get over to the tools. Don't let me forget the tools. Yo, I got mad LLCs, bro. It's ridiculous.
Okay.
Every time I have a good idea, I start something, I start another LLC. I slowed down a little bit, but what do I need to know?
What you need to know is there's a couple of things with LLC. So one, I think it's if you have different types of businesses, I think that makes sense to make a different LLC. So that's fine.
Or should I do different S corps? Or should I have one S corp that houses these LLCs?
That's a great question. So another question that's a very common question too. So the way you look at it and the way you kind of structure that is you have operational income and you have investment income.
Operational income and investment income. Okay.
Okay. So and I usually do this with the diagram, but like let's just say On the left side, you have operational income. Operational income is like active income. So income that you're making from like a business that you're actually actively working in, W-2 income, anything that you're actively working in, that's operational income. Then on the other side, you have investment income. So like that's passive income because those get taxed differently. So you have like real estate investments, you have maybe things that you're doing with the stock market, your investment accounts. That's the passive income. So you got your operational income and you have your investment income. If it's operational income, that's when you need to start considering things like, switching over to an S-Corp, because then you'll get hit with self-employment tax. On the investment income side, you're not necessarily getting hit with that.
If I switch over to S-Corp, I'll get hit with employment tax.
No, so if you have businesses that are operational, that are considered operational or active, then those businesses would be subject to that 15.3 self-employment tax that we're talking about.
Gotcha.
So if it's not that, on the investment side doesn't necessarily get hit with that 15.3 because it's passive income. Mm-hmm. So those have like different tax treatments. So if it's an investment, you could just throw it in an LLC and give yourself that legal protection. Remember, it doesn't give you necessarily a tax. It doesn't necessarily inherently have like a tax implication. It's just there for legal purposes to protect you. So like, let's say you have a tenant that tries to come sue you, they can't come after your personal assets. So you have the investment income, you have the operational income, and then what you want to do is you also, ultimately, you want to work with an attorney on this too. You ultimately want to go ahead and have those all sit like in what's called a revocable living trust.
A revocable living trust, okay?
Yep. So a trust is going to pretty much is a document stating how is your assets going to be allocated. Like in the event that, you were to pass or something were to happen, how are your assets going to be allocated? And you want those, and that also, if they come into the revocable living trust, it also gives you more protection as far as someone coming after you. So that's definitely estate planning is not talked about enough in our community. Let's
talk about it. Estate planning.
So
tell me, if you don't mind, how is your estate set up? I mean, you got to give me numbers, but.
Yeah. So with me, and I'll be honest, I still need to do the revocable living trust. Mm. So it really makes sense, especially if you have children. Like that's like a must, like guaranteed. We don't have children yet, so I haven't gotten into the whole revocable living trust thing. But basically, what you want to do is, like I said, you have your operational income, you have your investment income, and then you want that investment income and your assets to go ahead and flow into that revocable living trust. And then basically in that revocable living trust, you could say, okay, like you got a daughter, right? So you say, if I were to pass or whatever, my daughter gets all my businesses or whatever, and her husband can't get it. Like you could put that, you can get that kind of that specific and that detailed in there. So that's the way you want to kind of have that set up is, and then also too, like I said, your investments go in there, everything goes in there.
Wow. Okay.
But like I said, that's more of like the attorney lane. I kind of like, I touch on it a little bit, but I don't go like deep. I always partner with an attorney and I have them. I go ahead and do my process is I go ahead and draft it up because I get 70%. I feel like I could get 70% there to 100% there, and then I get the attorney to go look at it, give me the blessings, like, yo, this is good. Let's roll with this. And that's the way it's set up.
Got you. Okay. So all right, so give me some of the tools that we need as entrepreneurs, because we don't think about it until it's tax time. Right. Are there some tools that you would use to, if somebody can't afford a bookkeeper?
Yeah.
What are some tools?
Yeah. So a big tool is QuickBooks. So QuickBooks is an accounting tool that you can use to go ahead and record your transactions. So you got your income, your expenses, your assets, your liabilities. You go ahead and use QuickBooks for that. So that's relatively easy to use. It's easy to use, but it's hard for some people to implement because people are not in love with accounting. So, that's why a lot of people hire bookkeepers. But you can do it. You can go in there and basically classify your transactions. So QuickBooks is good. They have an app for that. So that's going to be important for people to use. Another app to use is MileIQ.
MileIQ.
Yeah, I always recommend my clients to use MileIQ, or QuickBooks also does it as well to record and track your miles if you're recording mileage. So as it relates to like auto expenses, you could either do actual expenses or you can do mileage. if you're doing mileage, then you want to make sure that you have that documented and recorded to like, it's basically, it's funny the way it works is that as soon as you start driving, it takes up a lot of battery, by the way. So just giving you guys a heads up, if you guys got
the app kills
phone,
your battery.
Yeah, it kills your battery because it's picking up every time you're driving.
Right.
So once you start driving, then once you're parked, it says, was that personal or business? And you kind of like swipe left, swipe right to let it know whether it's personal or business.
QuickBooks, is that on QuickBooks or the app, the Mile IQ?
They both can do it. Mile IQ, they both can do it.
And it's already embedded in the QuickBooks app?
Yeah.
See if I got it. Because I got QuickBooks on my phone.
Okay. Depends.
You know how to set it up?
Yeah. Let me see.
It's a business.
You should have it in there.
I should have it in there. Hold on 1 second. Okay, because for the audio experience, I'll do it after this.
Okay.
I'm being selfish. I'm being mad selfish. Okay, so QuickBooks, Mile IQ, any other?
Yeah, those are the two big ones, and then you could also take photos on QuickBooks, but you also if you don't have QuickBooks, like let's say you're using a spreadsheet, which a spreadsheet is cool just starting off, right? Especially if you don't have a ton of transactions. There's an app called Cam Scanner, and it's you can use it for a lot of things, but I like to use it for tax purposes because you could take a photo of something and it literally turns into like a scanned document. Like the quality is like impeccable. Like you wouldn't even know that, you know what I'm saying? It was just a picture on the phone. So they go ahead, they render it, and it's like a scanned document. You could use that for, documentation purposes.
Okay.
Yeah.
Yeah, when you obviously, well, I don't know obviously, but what does your wife do?
So my wife is actually she's like an IT auditor.
IT auditor?
IT auditor. So she's also CPA, but she's also
really?
Yeah. We actually met in college. Yeah.
I bet. So y'all go through all the numbers in the household.
We talk. It can get, like you said, a little bit boring. We talk accounting talk. We talk CPA talk.
So okay. So I want to understand now how, like, do you have the understanding of how Donald Trump, let's just say, makes so much money and doesn't have to pay taxes? Or, wealthy people. And I don't know if it's a bad thing. It's just they understand the rules that were laid out by their ancestors.
Right.
And it just kind of rolls that way. So how is that?
Yeah. So there's a couple of things. So one, and the 750 is an amazing headline. He did pay taxes, right? So if you look at like line 26 of his tax return, he paid like over $1 million in payroll taxes. That 750 that he owes is just the underpayment that he missed on that $1 million of payroll. So he does pay. Like I said, I hate when people. I don't want to see you. It's kind of hard to legitimately not pay any taxes at all.
Right.
So he's paying taxes, but he's not paying as much as a lot of people because he's taking advantage of the tax code. So the tax code favors business owners and investors, and he's heavy in the real estate game. So there's a strategy called a 1031 exchange, right? So basically the way that works is, let's say you invest in a property's $500,000, and you sell that property for $1 million. You have to pay $500,000. That difference, you have to pay capital gains tax on that difference, right? 50-20%, right? With the 1031 exchange, you can actually take those proceeds, reinvest it into another property, and defer taxes, meaning not pay. And you could do that for the rest of your life and never pay taxes on that. So that's how you can continue to grow and build your real estate portfolio. Now, there's different nuances. So you want to work with what's called an intermediary. And basically, you work with the intermediary, you tell them and identify a property within 45 days. They identify the property, you identify the property, then you want to execute on that deal within 180 days.
Gotcha.
So he's doing things like that to where he's just like deferring taxes. And he's probably going to do that till the day he dies. And his children are probably going to keep doing that as long as you're allowed to do that in the tax code. So that's one thing. Another thing is because he has...
But you have to buy the property within 180 days of you...
Execute on the deal. Yeah. So it's time. So, and that's another thing.
What if it goes to 200 days?
Then you
got to pay the capital gains.
Yeah, you pretty much lose that 10. It's like an exclusion. Yeah, so you pretty much you lose out on the benefit.
That's crazy because that keeps investors investing.
That's what exactly. So that's what the government's trying to incentivize people to do, because if you're a real estate investor, you're providing housing, you're providing you're providing living space. That's what they want people out here, living in homes or whatever. So you're pretty much taking the burden off the government instead of the government having to figure out and create like public housing and do all this other stuff. They're just like, you know what? If you go ahead and handle this for us, we're going to hook you up with this tax strategy. Yeah.
I like this conversation.
Right. So it gets deeper than, Trump has all these other businesses too, right? So he has his golf courses. He's running all of those at losses. So all of them are like losing crazy money. So like I said, if you have those losses from the business, those losses could be applied to your other income. So it can offset that income. And then he's probably doing a lot of things internationally. Another thing with one of the things that he did was his family, right? So he has his daughter, whatever. He pays his daughter like, I think $100,000 or $200,000 in consulting fees for him to consult for him. You know what I mean? Wow. But it probably could make sense because, she's a Trump and she's a celebrity and that's how the wealthy or the rich, or at least the enlightened, they keep money within the family because they do these things and they're able to reduce how much money they pay in taxes.
You gotta know the rules to the game, man.
You gotta know the rules, bro. You gotta
Golly.
know. And it goes deeper than that too. And then too, I would say with him, he has people on payroll, right? To have his, like, he has attorneys, he has accountants. Like you probably can't even get in touch with those people because they're probably working on like high net worth clients or whatever. So, some of the things that he was doing, he can risk it because he has a whole bunch of people that, can go fight for it. And for him, it's probably worth it to pay them $5 million versus giving the government $10 million. To him, that's probably worth it. So.
Wow. And that's why selling weed is illegal. You can't tax it.
that's part of it too. And if you're selling weed, they want you to record that too, because that's income.
Yeah.
That's how they got, so check this out. That's how they got, I think it was Al Capone. Because he was doing all this stuff, on what he was doing, right? Yeah. And they were ultimately able to catch him because he didn't report the money he was doing from his illegal activities. And like, oh, you're making this money over here, you didn't report it. And they got him for that.
Wow.
Yeah.
Dang, that's deep. That's deep. Yeah. Yo, so what about the crypto space?
Yeah. So the crypto.
It's not you can't tax it, right?
Yeah. You could tax the crypto. Yeah, bro. Yeah.
Can you? Is it different though? Is it like undefined kind of right now?
There's still some gray area around it. They keep changing the guidance around it, but essentially they look at it as like similar to like stock or stock options or whatever. So that's kind of how they're looking at crypto right now. But it's income. Like if it's income, if it's money, they want a piece.
Right. Goodness gracious. Woo. That is a really good conversation, man. I think people really just need to understand it.
Yeah.
Because that's how the wealthy get wealthy, because they know the rules. They know rules, and then they teach it to their kids, and we just keep the same money flowing.
Right.
But if not, then we take our wealth and we give it to the government through taxes, right? And we can't ever get ahead.
No.
So we need to take this more seriously. I need to take this more seriously. Okay, because I ain't scared of y'all. A little bit I am. But Mitch, I appreciate it. Look, I'm going to do a quick commercial and then I'm going to have you close this out strong.
Go ahead.
Okay, so this episode is sponsored, as always, by The Morning Meetup. The Morning Meetup, themorningmeetup.com, the only organization, company, community that gathers every single day for the betterment of entrepreneurs, man. Did you know that we gather every single day, Monday through Friday, 8 a.m. to 9 a.m. Eastern Standard Time, to help entrepreneurs grow their business? We help people that aren't entrepreneurs become entrepreneurs. There are a lot of successful entrepreneurs that want to be amongst the community, and they connect and they collaborate. It's an awesome, awesome community. A lot of people talk about bringing the community together, but themorningmeetup.com actually brings the community together. Hundreds of people on the line every single morning.
Real talk.
Isn't that amazing?
It's insane.
Yeah, man. For the podcast listeners, I'm going to allow you to be a part of this organization for just $1. $1, man. Just try us out for 7 days. Okay. After that, it's $79 a month. But if you don't like the trial over 7 days, just quit. Just be like, okay, I don't want to do it. No obligation, no contract, everything's okay. But if you want to stay around, you want to be empowered for less than a cup of coffee a day, you can be a part of the morning meetup. So go to themorningmeetup.com. It's already set up. You don't need a promo code. Just hurry up and go. Try it out for $1. See if you like it. If not, you can leave. But you're going to want to stay. So go to themorningmeetup.com. Mitch.
Yo.
Thank you for educating our people, man.
Appreciate you.
Thank you. This is awesome. We've been here almost an hour of really necessary information.
It's important, yeah.
It's very, very important, man. And not only just how to save money on taxes, but why. You know what I mean? Like, if you're going to start building generational wealth, it's not about making money. It's about keeping it and understanding the rules to the game.
100%.
So I appreciate it, man. Thank you.
I appreciate you, bro.
Let anybody. Oh, so you have a course.
Yep.
Right?
Yep.
Okay. And I'm going to ask you a favor. Can you give us a discount? Are you able to set up a promo code or something?
I could do that.
Can you?
Yeah. I could do that. Yeah.
Don't gotta be big, but something for like they listened all this whole time.
Right.
Give them a little, 10%, something like that.
I got them.
Can you do that?
Yeah, I'll do that.
See how uncomfortable that was? I did that for you.
That's love.
Okay?
That's
I did that for you. Okay, so all right, so tell me about your program and what it does.
Yeah. So Tax Wealth 101, it's a program pretty much going through a lot of the stuff I talked about, even more, talking about how you could use taxes to create generational wealth. So in there, we start off with the tax foundation. So just really getting your mindset and having you look at taxes completely different. Because once you understand the tax code, then you start looking at life differently and start moving differently. So we talk about that. We talk about how you can use your retirement account to save money on taxes. We talk about insurance. We talk about legal loopholes. We talk about how to pay your children. We didn't even get into that, but how to pay your children through the business legally and ethically to where you don't have to pay taxes and continue to build that generational wealth, using it as a vehicle to invest in, and a whole bunch of other things. Pretty much, I guarantee my big promise of the program is you're gonna walk away from that program knowing more than most tax preparers. Because check this out, one of the things I'd even bring up and talk about was a lot of what they teach you in school, and I went to like one of the top accounting programs in the country, but it's really geared towards having you work that 9 to 5 and kind of work in corporate America, but they don't really break down business taxes. Like that's a whole different part of the tax code that they don't really get into. It's mostly focused on, or small business taxes. They talk about business taxes, but more corporations or whatever. So yeah, once you go through that program, you're going to learn a ton. I've been getting amazing feedback.
Wow.
People have been loving the program. I had people from your morning meetup join.
Good.
They've been loving it.
Good.
Yeah.
That's awesome, man. So listen, there'll be a link below somewhere. Just click that link and enroll. Check it out. You know what I mean? So what do we put in a promo code? Maybe social proof? Can we do that?
Social proof, yeah. Okay. I like that.
All right, so there'll be a promo code, social proof. Just type that in, and you will get some love on the course. Okay. So again, man, thank you so much.
Appreciate
thank you so much. Let everybody know how to find you.
Yeah.
And close us out with a word of wisdom.
Word of wisdom. Okay.
Yes, sir.
So yeah, you all can find me at Michel Valbrun. That's MICHELVALBRUN. You can check that out. I'm on Instagram, Facebook, mostly active on Instagram. So definitely hit me up there. And then you can check out my website, valbrungroup.com or michelvalbrun.com. I'm on YouTube, pretty much most of the social media platforms. So I'm out here. And then as far as I didn't even get to talk about this. So I did a rap. I don't know if I told you, but I did a rap.
You got bars?
I got bars, bro. I got a couple.
Let's hear the bars,
I feel like I got a couple of bars.
Let's hear the bars.
So check
man.
a little bit of background. So it's based on Biggie's Notorious B.I.G. R.I.P. It's based on the Biggie's 10 crack commandments.
Okay.
So I flipped it and did 10 tax commandments.
The 10 tax commandments.
10 tax commandments.
Ooh,
So I'm gonna run through it a cappella.
Go.
Let me see if I still got it. All right. So check it out. Rule nombre uno, let the IRS know how much dough you hold, because evasion breeds penalties, especially if that prep messed up. Watch your tax go up. Number 2, document expenses you could prove. Don't you know them boys treat lying like violence? Take it from your highness. I done see mad cats and chicks come for their schemes and tricks. Number 3, go form an LLC. A lawyer set that up. Properly draft up, deed in the state up, shoot for them big bucks. They'll get that paperwork cleaned up. Word up. Number 4, I know you heard this before. Always rely on your CPA guy. Number 5, never tax prep where you rest at. I don't care if they do it free, tell them leave. Number 6, that tax advance credit, daddy, you think they're doing you a favor to forget it. 7, this rule is so underrated. Keep your personal and business completely separated. Business and blood don't mix like politics with no tricks. Find your business serious risk. Number 8, know the date your taxes due. If you miss the deadline, they'll be coming for you. Number 9 should have been number 1 to me. If you start a business, stay away from hobbies. If they thinking it's a hobby, they ain't trying to listen. You'll be stressing in the kitchen when them letters start hitting. Number 10, a strong word, corporation, strictly for bizmen, not for freshmen. If you ain't got investors, then say hell no, because they gonna want your money, rain, sleet, hell, snow. Follow these rules, you have mad bread to break up. If not, 24 years on the wake up. Flow hit your temple, watch your frame shake up. Caretaker, did you make up? When you pass, my bad, I hope you rake up a lot of cash with beachfront in Jamaica with a triple N star shift, a hooker stick up. Gotta go, more returns to make up. A word up. Hey.
I love it. The 10 tax commandments. I like that.
Yes,
joint.
sir. And you can check. I actually got a website too, 10taxcommandments.com. I got a whole lyric video where I rap it. I went to the studio. I was inspired to do it, and I was just like, it just came to me, and I was just like, yo, let me make it official.
Yeah.
Went to the studio, dropped the vocals, and yeah.
Oh, sorry, yo,
Appreciate
man.
you.
Go make sure y'all put this on repeat. Listen, repeat. Bump that in your system. You know what I'm saying? Mitch, I appreciate you, my brother. Thank you so much for coming. Listen, we can't close it out no stronger than that, man. So listen, go get you some social proof. Go build something. Pay taxes on the money that came from what you built, and then teach other people the game so you can have generational wealth, okay? Teach everybody else the secrets so your community can grow. So go get you some social proof. I will see you at the bank. Peace. What if I told you for $1, I will introduce you to hundreds of entrepreneurs every single morning this week? From all across the country, you'll be able to talk to hundreds of entrepreneurs, and I'll coach you. I'll coach you for $1 this whole week, and I'll introduce you to some of my successful friends for $1 this week. Would you take part in that? Well, go to themorningmeetup.com because that's exactly what we're doing here, okay? The only organization that gathers entrepreneurs every single day for the betterment of entrepreneurship, okay? Every single day, Monday through Friday, we gather, we're growing, we're learning. We got a book club. Have you ever seen hundreds of entrepreneurs reading the same book? Every single chapter, every single day, we're growing together, okay? You need the environment to grow in. Themorningmeetup.com, $1. I'm gonna give you all this for $1. If you wanna stay, great. It's $79 a month after that. If not, no obligation. You can leave whenever you want. All right? Themorningmeetup.com. I'll see you in the morning.